Hi friends, today we'll look at Asian Granito. We'll do both fundamental as well as technical analysis. First, we'll look at the chart. When we look at the chart, we know like it's in a continuous downtrend for various reasons. If you remember, like last year in September, around September, there was a rights issue. That time it fell. It fell down because the rights issue was at somewhere around 30-40% discount from the current market price that time. Again, this year, another rights issue was there. There it was around 46% discount to the current market price. But whether it is good at this point to enter, just as I always say, it's just my opinion. You should take your own decision or contact your financial advisor before entering into it. At this point, at 61 rupees, when you look at it, technically, when you see like it's on this trend line, if it comes, every time it gave a bounce. Not necessarily in a bear market that the same thing will happen, but there is always a chance. Okay, this is just a probability. So if it comes down, doesn't mean like it should come and exactly touch this line. This is just a trend line. So currently for trading, it looks attractive. Any dip from here or even from CMP, it looks attractive. And fundamentally, let us look at what are the ratios. Shareholding we'll see first. If you see shareholding, 29% is a promoter holding, which is less. Then FIs in March they have added somewhere around 0.2 percentage, nothing considerable. And I think this is the rights issue which is showing here for the DAs. Public is holding a major chunk of it, around 70 percentage. But whether this company has future growth chances, as in, if you look at what this rights issue they have done for, as in the money which they have taken from the rights issue. First time they were reducing the debt, that's very good. Second time they had like aggressive expansion plans. If you look at the latest news here, this is from IAFL. Asian Granito India completes land acquisition for its three new greenfield manufacturing plants in Morbi, Gujarat. And I think this location is strategically placed for this raw materials as well. And so, yeah, they are into like aggressively into expansion plans. They have a lot many expansion plans, and that has reduced. So that way, when you look into it, yeah, there is some prospects that we are seeing for future growth. Then we'll simply look into the financials. I'm just using money control only, not any other tools to see these things. When you look at financials, uh, this is revenue is like anyways increasing steadily. We'll look at the ratios. That is something which is interesting. Before jumping into EPS and all, let us see the margin ratios. Gross profit margin, operating margin, net profit margin needs improvement. Return ratios, when you look at it, it's decent, nothing great. But if you see the industry, then it is nearly in the same range, I would say. You see, as per Warren Buffett, if you take his words, he invests on companies which has like ROE. Its ROE is return on equity. It is written here. ROC is return on capital employed. So he likes companies which has more than 20 ROCE and ROE, and which should be even close to each other. That's his say. Here, if you look in that perspective, it is not more than 20, but in this field, even if you look at Kajaria, Sera, or any other companies, it's almost in this region. I think Kajaria only has like ROC more than 20. Even Sera also has ROC less than 20. That's what I remember. I didn't make a comparison of those companies because it is not comparable as per the market cap or as per the sales volume. So I didn't compare those things. We look at liquidity ratios, current ratio and quick ratio. Current ratio is decent. Quick ratio is just okay. Okay. Yeah, the current ratio and quick ratio, what it signifies, and like those were explained in earlier videos, but that is not on YouTube. I'll again put those things here, videos. Leverage ratios, when you look at it, debt to equity is 0.41, which is definitely good. Okay, because higher debt to equity ratio indicates what? the company is getting more of its money from borrowing, but here it is less, so it's good. Interest coverage ratio is also good. Interest coverage ratio of higher interest coverage ratio more than 1 is good. Here it is 4, so that is definitely good. Turnover ratios, asset turnover ratio is just less than 100 percentage, which I would say is just okay. And the next one is inventory turnover ratio. When you look at inventory turnover ratio, it's I think the inventory turnover ratios, when we look at it, those of Kajaria and Sera are also in this range, 5, 6, or like 5 to 10, within 5 to 10. So inventory turnover ratio is reasonable, I would say. I would say like it's not bad. And when you move to growth ratios, not great the year, and still like expansion plans means what, like we are looking at the improvement, right? So let's see like how it improves in future. We'll look at the valuation ratios. P is just less than 5, which looks good. Then P by B, price to book value, that is at 0.78, so it also indicates that it is undervalued. Then EV by EBITDA, what are these terminologies? EV is enterprise value, EBITDA is like earnings before interest, tax, depreciation and amortization. Okay. Good value, when we say of EV by EBITDA, it's like less than 10, we say it's good. So this is less than 10, 5 only. So this also looks good. Then we have P by S ratio, that is price to sales ratio. Price to sales ratio of 2 and 3 and all indicates like the company is very strong. Less than 1 indicates company is undervalued. So when you look at this, all these valuation ratios, it looks undervalued, and we never know whether they will again come up with another rights issue, which is 30% less than the market value for another expansion plan. So many rights issues, yeah, I don't like it personally. So I hope like there won't be any such aggressive rights issues where like the price is 40-50% lower than the current market price in future. Otherwise, it looks nice at this stage for entry. Yeah, I think like I have just opened ticker type also. Just these are the experts values. Like at least experts also refer to these things. So let's see. The intrinsic value, they say current price is less than the intrinsic value. ROE was FD rates. Stock has been generating better return on equity than bank FD. I doubt it because last 1 year it is not. Entry point, saying good entry point, and it is not in ASM or GSM category, so it looks good. And with the recent debt restructuring, not restructuring, reduction, as well as the expansion plans, the stock definitely looks good to me for medium to long term investment from here, or for even for trading at this point. If it comes further down, or like even from here, if there is a reversal, if it's showing there is a chance of a reversal, then like an entry with targets of like even 70 to 73, maybe something I'll be looking for. It is not any guarantee that I'll take this trade. Yeah, definitely you should do your own research on this, and this is just for information purpose. I know many people are stuck on this stock and they may be like interested to know how is this stock fundamentally and technically. So just whatever I feel, I have just shared. Thank you, friends.